Let's move on to decoding the key trends that are going to be influencing food services in future. A snapshot of the trends currently, internationally, and in India. The trends for the entire food services ecosystem, consumer, restaurants, kitchens, the people involved, and the logistics, of course. And here to discuss that is Rajesh Vig, partner and leader at PwC.
Morning. After two very insightful presentations, I hope this is half as interesting. Decoding the key trends influencing food services industry. We try to give a good overview of this in as simple a manner as possible. The 5 key trends, which are very obvious. One is, of course, the changes in demographic profiles. You've got countries like India where the population, the younger population is growing as a larger chunk, while on the Europe and the US side, they're facing the problems of having an aging population. Shifts in economic power. You have now the third world or the developing countries having a bigger say in terms of economic power. Accelerating urbanization, I think it's evident all across India. You've got climate change, which is unfortunately still not getting the kind of attention it deserves, and technological breakthroughs. I think when we did cover the demographics, what's very obvious is by 2025, a large proportion of the population is going to be in the 65 plus age group. This then tends to put a larger strain on resources. It is also something which is then having an impact in terms of healthcare costs. India, interestingly, will have a phenomena by 2025 of having almost 50% of the population in the younger age group, which then poses a different set of problems and opportunities. This is what we were saying. I mean, if you're looking at 50% of the population below 25 years of age, and interestingly, now an increasing trend towards the annual salary packages going up, which means a larger amount of disposable income available to the younger population. If you talk in terms of economic power, you've got now, while the developed markets are tapering off, it's the developing markets that are clearly emerging as the bigger markets, the bigger spending power. India, China, parts of Latin America. Of course, US and Europe continue to be markets. Europe has its own share of issues, and it'll be interesting to see how Brexit plays out there. Well, urbanization, that's something which is impacting just about every country. You have rural areas not presenting enough opportunities, and thereby a much larger influx into urban areas, which then the infrastructure is being incapable of providing for. I think Mumbai is a very good example of it. We're just growing with the weight of the number of people that are there out here, with infrastructure just not keeping pace. Of course, the one other thing that's also driving this then is the rise of megacities or smart cities. India is also going down this route, which will present great opportunities in terms of the retail industry. I think this is a given. What's happening is with the larger population and increased life expectancy, it's putting a huge strain on resources. You have 50% more energy requirements, 40% more water, 35% more food. All this in a scenario where the arable land is actually shrinking. This is where it's creating a huge issue, which is still not probably getting the kind of attention at a global level that it deserves. Of course, these then create their own set of factors for the retail industry and the food industry. Technological breakthroughs are across the board. That's not really something that's centric to retail or the food industry. Now, if you look at the food market in India, you've got the Indian food services market at about 248,000 crores in 13, grew at about 8% to 338,000. Interestingly, now poised to grow by 10% on a higher base to about 552,000. If you were to split this in terms of categories, casual dining and QSR still account for 3/4 of it, while pubs, cafes, and full-service restaurants form the other parts. Now, what are the drivers? Of course, one big driver is rising income. I have more money to spend. I am going to opt for eating out. I'm going to opt for ordering in. You've got markets which are under-penetrated. We have always been behind in terms of eating out. Indians eat out about 4-5 times a month versus about 28 times in Singapore and Hong Kong. I suspect half of US just eats out. So while at one end it provides a great market from the online and offline food services, it does create its own health issues. Urbanization. I think this is something which has been a trend prevalent across the globe. The consumption of food online and offline, apart from eating at home, tends to be much higher in urban areas. I suppose it's a question of exposure as well as disposable income. Now, if I were to split the food tech business by region, now if you were to look at October to December, 74% of the restaurants were in the top 7 cities, 26 in the others. Just from October, December 18 to Jan, March 19, the 74 has dropped to 64, while the 26 has gone to 36%. Clearly indicating that the drive for the food services industry is going to come out of rest of India, while it's a huge base in these 7 cities. And if you see the 7 cities out there, Bangalore is leading the pack. You got Delhi at 16%. But even the city presence has gone up from 110 to 215, with the orders per day, which were about 1.7 million, now at 2.2 million. What is clearly indicating is a huge propensity or an increasing propensity to for food services industry in terms of either eating out or online ordering. Well, you've got the likes of Zomato, your Swiggy, Oyo, everybody's out there. And in terms of, just to give you an example of how one, I mean, this is just more an illustrative example. Biryani by Kilo began with 1 kitchen and 1 city in 2015, expanded to 20 and 4 cities, and by 2022 is expected to go to 100. This is the kind of growth. In fact, the turnover is about 100 crores now, expected to increase 5-fold to 500 crores. Online ordering is here to stay. I think one of the other factors also is, which is a positive factor, is nuclear families, an increasing proportion of working women, thereby reducing time and willingness and obviously the effort required to cook at home. All these are factors driving the food services industry. What we did out here was we tried to cover a typical restaurant versus a typical cloud kitchen in terms of the EBITDA margins. While on the COGS, obviously it's similar, but on aggregator commission, a typical restaurant doesn't pay anything. Obviously, this is also changing now because even the larger restaurants are now having to go down the Swiggy or the Zomato route. But for now, that adds a 20% dip as far as the cloud kitchen is concerned. But then again, on all the other standard costs like rent, there's a saving of 17%, payroll has a saving of about another 10, all this adding up to a 12% increase in the EBITDA margins. Now, for an industry which has usually been around the 10-12% EBITDA margin mark, to move to a 25% EBITDA margin is extremely attractive, and it's a sign of times to come. So if you were to look out here, in terms of key takeaways, cloud kitchens now provide about 12% better EBITDA margins. Now what's the most important thing out here, apart from higher margins, is also the fact that you have a better ROC, because the cloud kitchens don't then have huge investments in storage, on ventilation and stuff like that. What we did out here was we sort of did a deep dive into age and geography in terms of the various factors between the younger and the older age groups. You look at brand perception. Now, from the younger age group, interestingly, the Indian or the Desi flavor is beginning to become the key driver, which is a reversal of what you were probably seeing 5 years back, where there was a huge shift towards the Western kind of food. While for the older generation, understandably so, it's quality that still drives it. When you look at restaurants in terms of likes, The younger generation wants a wider variety, while the older one is still fixated on hygiene and taste. Improvement areas from the younger generation's perspective is they need healthier options, delivery and ambience. These are things that matter a lot to them apart from the variety. While from the older generation perspective, it continues to be service quality, where they still believe there's scope for improvement, and more importantly, the value perception, which means I need to be given more for the same price, or preferably be given more for less. You look at packaged foods, again, taste, quality, packaging, this is across the board, whether you're in the younger generation or the older. But when it comes to improvement areas, clearly from the younger generation's perspective, it's health. So while online food and food service is set to grow exponentially, there's going to be a huge focus required on the healthier side of it. In terms of likes, is quality and taste that stand out in the packaged snacks. Again, improvement areas, what tended to stand out is healthy options along with quality and a better bang for the buck. So from a consumer perspective, everyone who's in the food service or food delivery business, you need to start providing healthier options, and I think healthier options which stand the test of time are not just fads. And then, of course, better quality at lower prices. The only way you're going to be able to do that is then by having a deeper penetration into the market. To be able to give people healthier options at great price points, you need to have better margins. And there, one thing that will drive it is economies of scale. What we did out here was, if you were to look at growth considerations, now we have covered it across 3 sub-segments: same-store growths, new store growths, and new growth vectors. In same-store growths, what are the growth considerations? You need an increased youth focus, which means, again, I need menus that are wider, they are more health conscious. I need an improved in-store experience. For someone who's dining out, he needs to be enjoying the entire experience, and a lot of it is derived from the what we call the ambient experience that you have out there, besides just the food. In terms of delivery and takeaway options, obviously, you cannot just survive in terms of having people come over. There will be times when I want to order from the same restaurant, but I need the food delivered in the similar manner at home. You need to be able to provide that to me. From a new store growth, obviously geography, you need to know where mega cities are coming up, wherein even within cities, you're going to have better footfalls given the kind of cuisine you're offering. You're going to have standardization of formats, supply chain processes, scalable operating models. These are all key requirements when you're driving new store growth. And vectors for the new growth vectors. One is, of course, cloud kitchen. Straight away, you have situations where 25% margins versus 13. The one other interesting thing that I did notice was a huge number of billboards, and this is not meant to be a publicity for that organization. Mandarin, the Chinese restaurant, the amount of hoardings they've put up and the amount of food service, the Chinese food they're beginning to deliver is pretty interesting. I'll be done in a minute. I think just a few examples of what people like Dunkin' Donuts or Paneria Bread are doing. Everything is relying more on investments and the healthier options out there. Clearly, purchasing decisions are being increased by proximity in terms of fashion purchases. Consumers are interested in purchasing autonomous vehicles. A lot of consumer behavior is being driven by factors which probably were not as prevalent or as important in the past. In terms of best-in-class, digital natives, online advocacy, open to new, I think these are factors that are driving and changing consumer behaviors. This is basically the same thing. Fundamentally, you need to get the proposition right, get the experience right, and execute with excellence. Thank you so much.